Welcome to the podcast of residential real estate. Over the last few years, residential real estate sector in the top 10 cities was struggling with liquidity crunch and inventory overhang. This was on account of low confidence of end users and lack of interest of investors. Covid-19 is expected to further hit demand across ticket sizes. With the economy going through one of the most difficult times in the decade, spending on high-ticket assets such as real estate will be adversely impacted. Developers will face double whammy on account of decline in demand and reduced funding. We believe that demand of new homes will drop very sharply in first half of fiscal 20 before recovering at a mild pace in the second half. With deterioration in demand and high unsold inventory in cities such as MMR and NCR, further decline in capital values is a likely scenario. On funding side, NBFC book to developers had already declined by around 12% in FY20. With further caution on the segment, banks and NBFC will likely stay away from incremental lending for next 9 to 12 months. Also, developers having support of rent yielding assets will face challenge in raising additional funds on account of cautious view on office and mall segments. Pre-COVID, industry was hopeful of mild recovery led by affordable housing, which accounted for around 30 to 40% of demand in last calendar year. Also, funding needs of industry were partially addressed by announcement of Rs 250 billion Real Estate Alternate Investment Fund by the government. While the scheme made a good progress in the initial month, incremental fundraising now remains monitorable as the fund returns have high dependency on market value of unsold stock. Risk to this segment goes up significantly in current scenario. Due to limited funding options amid lower demand scenario, one more round of price correction to the tune of 10 to 15%, especially by small and mid-sized developers, is likely. On the supply side, availability of people remains a major challenge even after lockdown restrictions are withdrawn. This will delay execution schedule of most projects by a couple of months. In case of Maharashtra and Uttar Pradesh, RERA authorities have already announced a 3 months extension of project completion timelines.